So if we remove our drawings on Apple, look at our naked chart. Let's look at our weekly, see what the trend is like. So Apple is going up to this pivot point. So that is our target in the weekly. Let's go to the daily and see what's going on. So yes, there is an indication that Apple is going to go past this one level and head on up to the weekly zone, which is 198.20. So if we look at Apple's earnings, there wasn't a big gap. So if we look at earnings, Apple earnings were positive, up and running 0.17%, and that was in September. So we have earnings. Let's see again. Yeah, sorry. But what am I saying? November 2nd was the earnings. Oh my God. So November 2nd is right there. So this is the little move that Apple made. Ta-da, right there. So indicate that that's our gap right there. So there was just a little jump up from here to here. So what it did was overnight it just filled that little gap and then it moved on up. So earnings was good. There was not a big gap for it to fill or to react off of. So since earning was positive, then the stock continued in that direction, in the positive direction. So the buyers just went on all in and moved the stock up past this pivot zone at 182, continued up to 189, and it's indicating that it can go to 198. So if you are a trend trader, you can swing trade Apple from anytime there's earning, just position yourself and you can ride the trade up to its weekly level, and our weekly level is at 198.23. So right now we can still trade Apple up to 10 more points. Okay, so you can wait for the pullback here because there is a little indication that it's going to go up right there, but right now stocks are kind of ranging. So as soon as it passes this 191 level, it will potentially go up to 198. So you can wait for it to pull back, and then when it pulls back, then you can take it up to here. Alright, so that is analysis on Apple. There wasn't a big gap, but it just shows you what happens after earnings on some of these stocks. I think Google had a good example of gapping of a gap trade, how it reacts after it gaps up or down. So let's look at Google. I already marked it off. Let's look at our weekly levels on Google. So Google, the weekly is not very clear, but according to the pivot point, it should go up to 151. If we go back to our daily chart, we see our earnings was October 24th. Earnings were positive, so 0.97%. That's the surprise as well. The earnings itself is 6% earnings. In the wrong thing. Here we go. So we have earnings was on the 24th. For some reason it gapped down. Even though earnings were positive, the stock gapped down. Okay. So with that, it gapped down past this pivot point at 127 and then went down to this zone, which was not really a pivot point. It is a zone right in this area. So it came down to the 120 area. So gap down to one pivot point, gap down to a zone, 120 zone, and then so that was 1, 2, 3 days. Then then the buyers jumped in. So I guess it was too expensive at 127, so nobody wanted to buy that price. Or let's say it was. I think what happened here is that yes, earnings were good, but it was maybe too expensive. Like it was in the 138 zone. So the big market movers pushed the price down to a well, I don't know if it's a price that is not so expensive, and then the buyers all rode it up. So it didn't take long for it to turn around after that sell off, and then it just progressively buyers fill this gap, which is a big gap because 137 to 128. Oh my god, that's a big gap. But it didn't take long for it to fill that gap. It was like 1, 2, 3, 4, 5, 6, 7, 1 week, and then it filled that gap. Just like that. So gaps are what we consider catalysts. They let the stock move in one direction or the other. So you can either do the gap play where you fill the gap because you realize that what happened is it bounced off the gap for a few days to weeks, but once it breaks, the one that breaks the gap is the one that usually continues the momentum. So it finally broke the gap on a week later, which is 3, 6, 7. 1 week later, it broke the gap with green candle. So the buyers kind of get momentum, get strength, and then they rode it up. They went all the way up for the next week and so all the way to the top of the gap. So this is a good way of maximizing earnings. If you don't play earnings, then after earnings, then you can trade in the direction of the gap. So if it's a seller's gap, you sell the stock down to the pivot points or to the buy zones, and then when you hit the first the first bar that breaks the gap, pretty much indicates that the buyers have taken over and now the buyers are in control, and then they'll fill the gap. And the same thing in the reverse. If it's a buyer's gap, then you will be selling the stock down to fill the gap. Let me see if I can find one that had a reverse gap. Let me see if we have anything. Let's see if we can find it in my list of stuff. Let's see if Netflix did one. those. What did Netflix do? I don't know. I don't know what was the story with Netflix. Netflix was the opposite. Oh, look at Netflix. Okay, so let's look at Netflix. Remove joy. So Netflix is earnings here. Earnings was October 18th, and it was a surprise, and it did a 6% earnings, which is a good number for us. There's a $300 stocks. This was the date, October 18th. So we mark one, and this is your, yeah, here. So normally have my dash lines there, dash, dash, and then this was a positive buyer's gap. So I put green to indicate that these are all buyer's gap. So I can put my little text in here that says buyer. So here is the buyer's gap. So gaps are tricky. So here we are, we gapped up and it kind of ranged 1 2 3 days, then it kind of went up. Then sellers tried to come back here. Pivot point is way at 453. So it eventually moved on up to this pivot point at 453. So if we mark this zone as one pivot point, let's have another zone up here. We do have another zone up here. So it looks like Netflix is going to go all the way to 485, and then we will see what it does, because here it tried to attempt to fill the gap, but the buyer's gap is pretty strong here, so it just shoot on up for days. Almost, this is 1 2 3 4 5 6 7 8 9 10. Oh, this is almost 2 weeks of upward momentum with Netflix. So if it continues up to this pivot point at 485, it potentially can try to come down. So it might take another 2 weeks to come down to this level, and then try to break this gap, fill this gap again. So let's watch and see what Netflix does. In this case, when it does come back to this gap level at 401, it just wait for it to break the gap, the upper gap level, and see what the momentum does. And in this case, you would sell to fill the gap. So it would be sell to fill gap from point A to the lower pivot point of 344.70. So that's how you would play the gap in this one. So just remember that gaps don't normally fill immediately. Earnings gap are very strong. They have strong resistance and support levels, so they don't fill right away. This is a buyer's gap because buyers move the price from 344 all the way to 400. So this is a very strong gap, and you can see where it touched, and then it just went all the way up. So this is a strong gap. It's gonna be a while before it finally fills. Okay, so that's just one strategy of trading with gaps that you can implement in your strategies. So hope you learned something today.